What's up, everybody?
Oh,
Everybody having a good week?
and yes, sir.
Let's go. Let's go. Angelo, what are we at for the week so far?
I'm at AK. Connor's at like 15, and then we have a new agent, his second month in the business. He's already at like 80 to 90K on a month. He's already at like 20K on a week. Kevin come back, and he's moving out here. He just signed his lease for his apartment by the mall, for next month, and he has
Let's go.
doing over 100K this month.
Let's go. Awesome. All right, we'll give it a few minutes for everybody to get in here, and then we will get ripping. We will get ripping. Any other wins for the week? Simon, where are you at?
What up, Jonah?
What do you got for the week, bro?
Bro, this week's been a little rough. We're at 3K, but we're coming back.
Hey, that's
It's
okay.
not the end of the week.
That's okay. Guys, make sure that I was talking to a few agents. Make sure you guys are checking your issue paid report. That is the only metric that matters. I was talking to some of you guys on the one-on-ones, and a lot of you guys are looking at and tracking what you're submitting. At the end of the day, the IP is the only thing that matters. That's the only thing. So make sure you guys are tracking that, and you guys are being very vigilant about that. Simon, you issue paid 42K last month, right?
You're asking me?
Yes.
Yeah, I did 42.
Let's go.
Mhm.
I didn't ask Simon to do this. I'm putting you on the spot. Simon, what are a few pieces of advice that have allowed you to consistently produce 40K month over month?
Well, I would say
Somebody that's
having
never done
the
sales
leads,
before.
no one like someone that's never done sales.
Yeah.
I would say consistent lead spend. Like that's number one. If your lead spend isn't consistent, I mean your numbers aren't. And like having someone else working for you that's booking appointments on your calendar. So that way, like it takes time away from dialing, like trying to find those people that are qualified. It just makes it a lot easier.
You guys have to incorporate the right systems into your business. That's incredibly important. And there's really three parameters that make or break an agent in this business. Number one is skill set. Number two is inputs. Number three is lead spend. The truth is you can possibly get away with one out of the three lacking. But if two out of the three or three out of the three are missing, then that's a recipe for disaster. So for example, if I'm a new agent, I come in, I've never done sales before, and my skill set is not where it needs to be, which by the way, everybody sucks coming in. That's okay. That's a part of the business. The main thing you guys need to be focused on if you're new is paying down your ignorance debt as quickly as possible. But on top of that, if my skill set isn't where it needs to be, then I'm putting in reps on reps and reps and reps. If I'm not putting in the right reps and my lead spend isn't where it needs to be, then that is guaranteed that person will be out of the business in 6 months. So take an audit of where your skill set is and be honest with yourself of like, if you're not where you want to be, then what you make up for in skill set, you make up for in reps and volume and also in lead spend. Because for me, when I was new, I was so bad that I consistently invested in the leads, and you could have a terrible skill set, but as long as the inputs are high and the lead spend is where it needs to be, then you're going to produce. But if your skill set isn't there and you think, ooh, well, my skill set isn't where it needs to be, so I'm not going to invest. Well, that's a recipe for lack of success. And eventually it's a period of time where the production might be a little bit lower, but then the lead spend's even lower, then your production is going to go down and down and down and down. So take an audit of where you're at in all three categories and take an analysis and figure out, all right, well, if my lead spend's low this week, I'm going to increase my lead spend. If my skill set isn't where it needs to be, I'm going to watch some extra trainings and I'm going to get better and I'm going to role play with my mentor. If my inputs aren't where they need to be, then I'm going to double down on the inputs. So figure out where you're weakest this week in your business and then double down and do that. Quick shout out before we introduce our guest. Shout out to Jake Rotterman. Last month, we had another record-breaking month. Jake Rotterman did 113,000 issue paid, had a massive deal, which is what we're going over on this call. We had Fabian, who issue paid 107K, We had Will issue paid 93 grand. Damon issue paid 84. We had Chris Mumby issue paid 73. Shout out Ryan Spitz, Tampa office again, 61,000. We had Julio at 57. We had Xander at 56,000. We had Connor Martin at 53,000. We had Caden Sloan at 50. We had Joe Hogan at 50. Cruz at 50. Atlanta 50. Gabe Anderson did 47K. Shout out Gabe Anderson. We had Aiden Myers at 46, Angelo at 46, Simon at 42, Jack at 41, Diego at 41, Josh at 41, Sophia at 41, Blake at 40, Nico 40, and then Ryan at 40 as well. So if you guys aren't where you need to be, I would recommend reaching out to somebody that is producing on a high level, somebody that you may or may not talk to or see on a daily basis. And if you guys want to be around a top producer, get around top producers. Last thing before we introduce our guests, guys, if you are not registered for the Chicago conference, immediately while we're on this call, go register, book your plane ticket. This is going to be a 2-day masterclass. And especially if you're new, getting out to the Chicago conference is genuinely the best thing you guys could do to invest in yourselves and grow your business. So without further ado, is Greg in here?
Yeah, I'm here.
What's up, brother?
Very impressive numbers. Yeah, man. I mean, what a monster team you guys have. It's very impressive. For anyone who doesn't know, you guys are all very lucky to be on Jonah's team. Very. But sorry, go on.
Blessed to be working with great people. I'm excited. I'm really excited for this call. Some of you may know Greg. Some of you guys may not know Greg. Greg's an absolute beast, and he's an OG in the insurance industry. Greg, how long have you been selling insurance for?
Over 15 years.
Okay. And so I'm really excited for Greg to dive into this because he didn't come in the same model we came in. You started with, it was New York Life, correct?
No, so it was Northwestern Mutual back in 2011. And then in 2014, I joined Mass Mutual. But it was a career contract and a career agent. We had two products, and that was that.
Very similar, but much different style of doing business. And your main demographic is what I want to train on this call is you go after much higher net worth clients. And the reason that I asked you to hop on the team call and train the guys was some of you guys may have heard me share this before, but I reached a turning point. This was about 2 years into the business. I had already produced a crap ton of insurance year one. I produced even more and doubled my production year two. And I was coming off of a 100K month. And I thought the simplified issue space is phenomenal. It's changed my life and it's allowed me to make a tremendous amount of money. But as salespeople, what are we looking for? We always need a carrot to chase. And we always need to be developing and growing. If you're not growing, you're dying. Growing and getting better. So I came to the realization, I thought, man, like where do I want my future to be? And I was thinking more long term. And I really had a decision. I was talking to a few different people. I said, do I go the agency route and double down and not only continue to produce, but train other agents how to do so? Or do I just say, scribbling a team and go after high net worth clients? So I took the first route, which panned out fairly well for us, I'd like to say. But not everybody wants to grow and build a team. So for this call, I want you to really expand people's minds, first of all, and show them what is possible, but then more importantly, walk us through your sales process on how you talk and communicate with these clients, because the way you're communicating with the clients that you're talking to and serving on a daily basis is much different than a simplified issue client. So Greg, I'll give it to you and you can take this call in whatever direction you want to go.
Yeah, so first and foremost, I want to educate everyone on the call how different the space is now than it was 15 years ago. So 15 years ago, back at Northwestern Mutual, there was no recruiting. There was no downlines. There was no hierarchy. We all started at a 50% comp and 45 on term. So the fact that you can build a business and have a business in a box that is scalable is amazing. Not to mention, every single person back in Northwestern Mutual was cold calling. I had a phone book and I had a phone. There were no leads, right? So after I'm cold calling and knocking on doors and doing everything I could, I realized very, very quickly, if I'm going to call people, I want to call people with money, not poor people, right? So calling people with money, as you know, Jonah, if a person is calling you to sell you life insurance, you're going to hang up the phone very quickly. So I realized I had to be very strategic on the phone to get a meeting with them. But prior to that, I really wanted to educate myself and I wanted to make sure I knew what I was doing. So a lot of joint work with high level agents, but so I was calling a phone book. Um, and I realized that if I call realtors who had their cell phones online, I could blast them. So I called a lot of realtors who had big houses for sale. And what I would say is, listen, I specialize in some very unique areas. I would love to stop by and introduce myself and share with you what I do. That's a lot different than, hey, I sell life insurance. Is there a need for life insurance? They would say no. Um, when I got to the meetings, I had to be very strategic and I could share with you my whole approach, just how I open cases and everything else. Um, but the bottom line is I was calling high net worth guys and I bring people in. My approach every single meeting is I specialize in four very unique areas. The first is income tax reduction. The second is asset protection. The third is retirement planning. The fourth is life insurance planning. And Jonah, out of those four, is there one that sparks an interest, whatever it was? Now, on this call, we all know that those four things are what?
The same.
They're life insurance. So no matter what, I knew I had to open a case in some way, shape, or form. They used to call me the undercover insurance brother because I would never mention the word life insurance and I would dial it down. When you can educate a client, you're an advisor to that client. That's how you build trust. Every single person who'd walk away from a meeting with me learned something. So let's dive into it a little more. We're talking about, let's say, income tax reduction. Every single time I talk about qualified dollars and I talk about non-qualified dollars. And if you're the prospect, I'll say, Jonah, do you know the difference? No one knows the difference, Jonah. No one. So I'll make it very simple. If it's a qualified dollar, very simple. It'll qualify that year for a tax write-off. I make 100 grand. I put the max into a 401k of 23.5. That's a write-off. I pay taxes on the remaining, right? So it's great. I had a tax savings there. Now, it's not liquid until I'm 59 and a half years old. You're a young guy, right? At the end, it's all taxed. So I have no liquidity and major taxes. And Jonah, you're a smart guy. We're over, what is it? It's like $42 trillion in debt. So
Yep.
in your opinion, are taxes going up or down?
Up.
Okay. In your
See the new
opinion,
tax bill they just passed in California?
crazy,
Yeah.
right?
Like they weren't
And
already paying enough.
in your opinion, if you're putting money into any kind of qualified plan, like a SEP IRA, a simple IRA, a 401k, are you planning on having more money or less money than right now?
More money.
More money. So you want to pay taxes later on a higher amount of money, and then potentially, as I think you agreed, a higher tax bracket or a higher tax rate, right? So that is a qualified plan. Opposite is a non-qualified plan after tax dollars. I make 100 grand, I pay my taxes. Then I invest my dollars. The reason it's so compelling is because after tax dollars, it grows tax free. I have tax deferred growth and tax free withdrawals. Now, Jonah, you're a very successful guy. There's only a few options as far as a non-qualified plan. Non-qualified, they have annuities, either Roth IRA, which congratulations, you make way too much money, and life insurance that is structured for cash. Now, a Roth IRA again is not going to be liquid until you're 59 and a half years old. A life insurance policy that what I do is I structure this for cash value and death benefit so I could shrink down the death benefit and stuff this thing with cash, right? Now I have a retirement plan. I have liquidity, I have tax deferred growth and tax-free withdrawals. So that's how to be tax efficient. A lot of people say, I care about my asset allocation. I care about tax allocation, right? How do I become as efficient as I can as far as taxes? And Jonah, every dollar you ever put into any kind of qualified plan, you have a partner. Ask me who the partner is.
Who's your partner?
The IRS. Because
Mm.
at the end of the day, when you pull that money out, they're taking theirs. And the best part, you don't know how much equity they have in your 401k until later on. So every dollar that's in a qualified plan, the IRS is my partner. I can't control it. And if I do want to take money out, I get crucified. I have penalties and taxes. So how do I'll say become as tax efficient as possible? I'm going to send you something real quick if you want to share it after, but I think it's very good.
I'll drop in the chat for the guys.
Every meeting I always have this. Even if you want to pull it up right now, you can. I'll show you how I use it.
You want me to share my screen?
Yeah, or just if you want to upload that video or sorry, the picture, do you mind?
Yeah, I'll put it in the chat here. Boom.
And if you could put it on the screen so they could see it real quick.
Yeah, share my screen here.
So, guys, it's called king size nest eggs. That came from Barron's Wall Street Journal, not from Greg Shapiro, not from Mass Mutual, but from Barron's. And it shows at the time it was the top CEOs in the country, and it was where they had their allocation. Okay, so Jonah, real quick,
Yep.
go to, I guess, Rex. Okay, he's number 2 from ExxonMobil. If you look at his qualified dollars, okay, he's $2 million. If you look at it, if you look at his non-qualified, $53 million. Where are the
Mm.
CEOs keeping their dollars? Because the employees have 401ks, right? But the
Yeah.
employers, they have non-qualified dollars. And you explain taxation, everything else. Then asset protection, I dive into. Then retirement planning, I dial into. And then life insurance planning, I dial into. I think the problem with most agents these days is you're playing in a very small sandbox as far as mortgage protection. And yes, it's a scalable model. It's a great model, right? But eventually you want to expand your horizons and see what's out there. I mean, they always say, and I've heard Jonah say this as well, the larger the problem you solve, the more money you're going to make, right? There's a direct correlation. So if there's an issue they have and there's a problem and you're solving that problem, you make way more money on larger problems. I always talk about estate planning. A lot of people have no idea about estate planning. So estate planning, there's an estate tax. If you're a married couple, it'd be a $30 million estate tax exemption. If you're single, 15 million, which we can ask questions after. I'm just going through it with you, right? Okay, so Joni, you're married. You're worth $100 million. Okay. You have an exemption for yourself, and that's 15 million and 15 million for Claudia. That's a
Yep.
$30 million exemption. Okay. But you're worth 100 million. When you guys pass, God forbid when you do, there's a $30 million exemption. Your us family and your children have to pay an estate tax on the 70 million. It's at 40%. They have 9 months to pay. So you're going to lose another $30 million of already taxed money that your children will have to pay to the IRS. That's an estate tax. That's a death tax. What my clients do is buy very large life insurance policies, and that covers the estate tax.
At any point, can that life insurance be taxed?
Yes, it's a great question. It's how you own the policy. So a lot of advisors who don't really, I'll say, understand the high net worth model, how you own a policy is very important when you have an estate tax issue, right? So Jonah, if you own the policy outright, it's part of your estate, that life insurance is now becoming taxable. If it's out of your estate and owned properly by an outside trust, it's non-taxable. And guys, the reason I'm saying all this stuff is not to confuse anyone, but it's to show you what real life insurance planning is. And that's how you get to, I mean, very large premium cases where they need a $5 million policy, a $10 million policy, a $15 million policy. And I want to expand your horizons because if you go and meet a lawyer out and you're like, hey, sir, do you have a mortgage? No, I have no mortgage. Well, then I can't help you.
Yeah. And Greg, because right now I want to keep this as tactical as possible. And I'm looking at the Zoom and I see some eyes that are glossed over. But you guys realize that everything Greg does and what we do, they're the same in the aspect that we all sell life insurance and we all have the same license. What Greg is trying to tell you guys is there has to be a need and intent behind it. Doesn't matter if it's a client worth $100 million or the regular clients that we serve on a daily basis that are making $60,000 a year. If you get anybody on the phone and say, all right, well, you want life insurance? 9 times out of 10, they're going to tell you no, because there has to be a need and intent behind it. So Greg, let me ask you, because we all work mortgage protection, and every so often we run into, and this is the main reason I asked Greg to hop on this call, because we run into high net worth clients, and a lot of agents struggle with that, and myself included, back before I learned how to communicate with these people. So you call lead, they say, hey, we're both making $30,000 a month. We have a total household income of $60,000 per month. I've got savings, I've got assets, I've got a 401k. I don't think we really need the mortgage protection. How are you handling that situation?
Sure. So it's all in the fact finding. It's all in the fact finding. While they're putting money in the 401k, I'm asking, why are you doing this? Why are you doing that? Okay. So Jonah, you're how old are you? 40 years old. You work at a law firm. You have a 401k. You're making contributions to your 401k, right?
Yes.
What are you putting away in your 401k?
We try to do about $100,000 a year into the 401.
Okay. Is there any kind of match or no?
Let's say in this situation, no. I wanna hear how you handle
Sure.
both scenarios.
Sure. Okay, so if there's no match, Jonah, you do understand that there's a management fee every single year of about 1 to 2%. You're 40, it's not going to be liquid until you're 59 and a half years old, and then the entire thing is taxed. So if you're 45 or 50, you want to buy a house, you want to build a business, you want to pay for your daughter's wedding, you can't touch those dollars. There's volatility and taxes. Most of my clients want something that's after tax dollars, right? And more liquidity, especially because you're paying a management fee. I promise you, to somebody who you'll never speak to, ever. You'll never speak to that person. You have no, people want options and they want liquidity. You just told me taxes are going up and you're going to have more money later than now. It might make sense to put a small amount of those dollars, right? Because Jonah, what does diversification mean to you?
It means not having all my eggs in one basket.
Exactly what it means. All your eggs are in one basket. Your entire retirement account is in one basket, right? You're putting 100 grand away into a qualified plan, which you don't have access to. It's volatile. Imagine you're 59 years old and now the market tanks and taxes are up, right? Because back in 1987, in '08, in '09, in 2013, and in '02, you lost half of your retirement account, less taxes. Are you able to live off that? off 30% of your retirement? Because I'm not. So again, most of my clients want optionality, they want tax allocation, they want liquidity, and they want to make sure they've so if taxes are up, I take out of my non-taxable. If taxes are down, I take out of my taxable. I have options. I have diversification. Multiple buckets is the key to wealth. Having multiple buckets.
So
And
what are you
sorry,
setting me up with?
we want to put a portion of those dollars into a non-qualified asset. Then I'm going to ask about life insurance planning. Hey, do you have life insurance?
Yeah, I got a policy I took out a few years ago.
Okay, what kind of policy is that?
It's a State Farm $500,000 policy.
Is that term? Is that permanent?
I think it's a term.
And you got it, you said a few years ago?
Yeah, it was about 5 or so years ago now.
Okay. Was that 20-year term, 30-year term?
20 year.
Are you planning on dying by 55?
Hopefully not.
What was the purpose of buying the insurance?
Just that anything happens to me, my wife, she's able to get some money to be able to continue to pay for the mortgage.
Okay. And then why 500,000?
Just what made sense, what our agent told us to take out at the time.
God, so Jonah, if you don't mind me asking, what is your monthly nut on monthly basis, meaning your expenses all in your mortgage, food, groceries, the kids, everything? How much are you paying a month for all your bills?
About 30,000.
30,000. Okay, so Jonah, let's do some math. 30,000. Yeah, I'll do it later. So, A, you're way underinsured. What I want to do, or sorry, what again, most of my clients do is have a certain amount of insurance. Whereas if they passed away, God forbid, you would leave your wife a large life insurance policy. They can invest it very conservatively, like 5, 6%, and net me that $30,000. So you need about $5 million of insurance. You're way underinsured. This will last you about a year plus loss of income.
Did you guys hear what Greg just said? We need enough life insurance for you to be able to invest the death benefit to yield a
Never touch
monthly
the
return of
principal.
6% and just live off the interest.
That's what smart people do, Jonah.
That's gold. That's
So,
gold.
anyways, most of my clients, that's what they do. And that's how I get the formula every single time on how much insurance you need. Because people say, I want 5 times income, I want 10 times income. There's no rhyme or reason behind it. Mine is, hey, you're paying $10,000 a month in expenses. We need $2 million of insurance. That way, Claudia has the $10,000 a month to pay the bills, right? Because if not, on a $500,000, she's screwed in a year.
Yep.
Plus a mourning phase, not going to go back to work. There's a lot of things that you're not taking into account. Now let's fast forward a little bit. You're putting 100 grand away into a 401k, right?
Yes.
Okay. The $500,000, a guy who makes $1 million like yourself, it's very atypical for somebody like you that makes a lot of money to be renting your insurance. On a 20-year term, I die in year 19, it was a great decision. I die in year 21 is a horrible decision. Most of my clients don't want to have to die in the right year to take care of their families. And not
That
to
makes sense.
mention, if you have something that's a permanent policy after 20 years, optionality is the key. I want to keep the policy, I keep it. I want to take cash out of the policy, I take cash out of the policy, right? I have a positive arbitrage. I have options. In 20 years or 15 years, if you need the insurance, which you will, it's going to be very expensive and very difficult to get you a new policy. So again, most of my clients like options and they don't want to have to die in the right year. So I
Pause
think we
there.
should take a look at something that's a go, sorry.
guys, I want you to pay attention to how Greg is communicating. He's not saying, "Hey, this is what I think we should do," or "Hey, do you want to do this?" Or
I tell
he's
them
not,
what they need.
he tells them what he needs because he's a professional and he's an expert, and people want to work with professionals, and people want to work with individuals that know what the heck they're talking about. So he takes full control of the situation and tells them he doesn't ask them, no, he tells them exactly what they need. So it doesn't matter what they're making a month, whether they're making 5,000 a month or $50,000 a month, the same principles apply.
And guess what? Okay, we want the right amount of insurance. So say we need $2 million of insurance because Claudia and you, your overhead is about 10,000 a month, right?
Yep.
I don't care if it's term or permanent, right? Because if something happens to you, I promise you, Claudia is not going to say, was it term or perm? She doesn't care. All she cares about is, hey, I want to make sure that I'm okay. I want to make sure that I can pay the bills of my family and make sure that there's no fire sales and I'm screwed. That's all they care about. So product neutral, I want to make sure first and foremost, we have the right amount of coverage. Then we can go from there and back into your budget, right? But first and foremost, the right amount of coverage. And most
Yes.
people are way underinsured. And if I come in after, I'm gonna go after your stuff.
I want to make a note on that because talking to some agents where guys, IULs are great policies and they're phenomenal for mortgage protection and specifically what we do, but not everybody needs an IUL. I was just talking to an agent last week. The client had a $300,000 mortgage and he sold them a $50,000 IULE. Well, I said, well, bro, why did you, why did you, well, it was all they could afford. Like, well, did you even show them a turn? No. He's like, I only sell IU. I was like, well, you got to figure out what the client needs. And I like what you said, where figure out how much protection they need, product neutral, and then back it into their budget.
Yeah, see, that's a salesperson. That's not the advisor that I am. Right, because I can get you some cheap term insurance and plan ahead. I have, I always review everything on my client. I speak to them twice a year, every single year. I tell them the game plan. Hey, we have term insurance now because that's all you're able to afford. And next year, we will be making conversions. I help them plan. You have to, I mean, listen, a man without a plan plans to fail. You have to plan. You have to educate, your clients on the end result. And again, very atypical for a guy like yourself to have all term insurance. Most of my clients want to own what they have and have choices. And guess what, Jonah? In 20 years, if you don't need it anymore, you cash out, you made money. So that's how I get the amount of insurance.
I like this a lot because I want to go back to what I said earlier and double down on. I think people, when they run into wealthy clients, they get intimidated or they think that they don't need it.
They're
Wealthy
easier.
clients need more. They're easier. They need more. They need insurance more than poor people because they have actual assets to protect. So I want to ask you this because all of our guys run into this objection, which I doubt you even get just based on the way you structure it. But how do you handle a client where they said, listen, Greg, we got a bunch of money in savings. We've got assets. I've got real estate. Something happened to me, my wife would be fine.
Okay, so first off, I'd be fact finding a lot.
Yeah.
You have money in your bank account. You said you have cash, you have savings. You're
Yep.
losing money every single year due to inflation. That's number one. That's probably the worst place to put it. And then real estate. What's a real estate for? And also,
We
how
got
much real estate do you have?
we got $1 million in real estate.
$1 million in real estate.
Yep.
So if something were to happen, you want your wife to have to fire sell the real estate to pay the bills?
No, but we have enough cash flow coming in that we'd be able to supplement some of the bills
A cash flow from what?
from the rental properties.
Okay. So again, you look, it's all about planning. It's all about making their lives easier, right? Like if I said to you, Jonah, okay, so if the insurance was free, would you do it?
Of course.
Okay, well, it's not free, but it makes sense. And this is, I mean, listen, it's all about how you handle things and how you position things. when you say I have real estate, I have cash flow, that's great. But on top of that, where are you parking your dollars? Because I assure you, you putting your dollars in a non-qualified account is way better than cash. I mean, cash is just dumb. Right? Having your money work for
Do
you,
you tell clients that?
I say
Or
it's
you
not
say it just like
smart.
that?
Yeah, it's not
It's not
smart at
smart.
all. Yeah, look, I have guys worth hundreds of millions of dollars who keep 50 grand in their bank accounts. All their money is out to work. All their money is out to work. I mean, listen, if you educate them on what really smart people do, they want to do what smart people do. And the higher the net worth, the easier the client. They don't have pushback because it makes sense. If you talk about these, hey, non-qualified dollars, this is why. You have liquidity. You have a death benefit that never expires, right? I have true crediting, meaning my account can never go backwards. I have optionality. I have tax allocation. Like if you're talking about all these things, you don't have to sell it. If you explain what it does, I promise you this, that if life insurance was called a non-qualified deferred comp plan, everybody would buy it. But the fact that it's called life insurance, it's a curse word. And if you can educate them on Section 7702 of the IRS and how you get stuff in cash, guys, if I were you, I'd be studying this stuff every single day after hours on your downtime. Learn about life insurance, learn about taxes. And there's one thing that I want to say to every single person on here. There's a few people you should have in your Rolodex no matter what. You should have realtors because it's a referral game. I get referrals. I just got one today. I get referrals almost every single day, and I stopped asking a long time ago, right? You need a good CPA who understands life insurance. You need an estate planning lawyer because that's all they do is life insurance planning, and a wealth advisor. The reason the wealth advisor is because, guys, we don't manage money. We sell life insurance. We sell fixed income assets. If you can partner, so a lot of my business, like I'll tell you, my largest cases have come from wealth advisors. My largest cases have come from money managers. And I'm no competition because I don't manage money. It's a referral game. If you can walk into an office and say, Jonah, you're a lawyer. How do I help you in your business? Everyone comes into meetings and tries to sell them something. Jonah, I want to introduce you to this person and that person. Now you're adding value and now you're an advisor. Like Google can't replace me, right? And ChatGPT, it can't replace me. I'm a relationship guy. I have everything that you need. People call me for a car guy, a watch guy, a wealth advisor, a lawyer. I'm their go-to guy. That's who I want to be. I'm their advisor. And all I do is sell life insurance.
That's good. Andre asked, what would you say when they say I have a long-term financial advisor I've been working with? I'll talk to him about this.
Yeah, listen, I would love to also talk to him about it. I'm sure it's better, if I explain what I do, but I would love to jump on a call, explain to him why we're doing this.
Great.
I swear to you, there was one client out of Miami. I spoke to the advisor, Pat Dwyer, huge out of Miami. I sold him life insurance too. And that's his wealth advisor. If you can educate and know what you're talking about and explain why we're doing this and you know the products, you're no competition to them. It makes sense. I don't think any advisor is like, man, life insurance is a horrible idea because it protects your family as part of a fixed income part of your portfolio.
So how are you structuring it and what policies are you selling?
Every client is different. A lot of high net worth guys, they like whole life insurance. They like whole life insurance because the guarantees and it works a lot like fixed income. If
Yep.
you're a 50-year-old guy, if you're a 60-year-old guy, it's very uncommon to have all your money in stocks and real estate because it's very volatile. So, Jonah, you're 60 years old, you're worth $10 million. You have $5 million in your 401k and $3 million in equities, like stocks. It's very volatile. Most of my clients want to put a portion of those dollars in something like fixed income that has guarantees and you can't lose. So I use life insurance as fixed income because life insurance is going to outperform your CDs, your bonds, and other fixed income.
And it's litigation proof.
And it's asset protected. So again, if I'm speaking with the advisor, I'm talking about fixed income. Hey, I use this as fixed income. They will understand if you can explain it properly, why it makes sense. You're not taking money from them. You're putting a portion of their dollars into fixed income. Safe dollar strategy. That's liquid.
So Andre asked another good question. The benefits of max funding a whole life policy versus max funding an IUL.
It's a great question. It depends on your health and your age. A lot of people don't really understand the fundamentals of how life insurance works and the cost work. So I'm just going to break it down very quickly. Okay. On a whole life contract, you have the person and their age. So you're 30 years old. They average at mortality to say 80, and your COI, your cost of insurance, is fixed every single year. That's why at the beginning, you don't really have a lot of cash. But the cost of insurance never goes up. And you have guarantees. I have guarantees. Guaranteeing the policy is roughly 4%, let's just say, right? On IULs, my cost of insurance goes up every single year based on my new attained age. So they're expecting the market to do 6%, 7%. So over time, it's going to outperform, but it's, I'm two very different people. I'm a risky guy. I like IULs. There's more risk, but there's more reward, right? The cost of insurance will go up, guaranteed for sure it's going to go up. Hopefully it's offset, but that's why you do every year you're doing reviews with your clients. Whereas a whole life contract, it lasts forever. That's the only policy that is really going to last forever and build cash value. But it's a more expensive policy than an IUL.
So break down what scenario would make sense to do a max funded IUL versus what client would be best suited for a max funded whole life policy.
A young guy that's in his 20s and 30s and 40s healthy, I'm doing IUL max funded all day long. A guy who's older, because in your 30s, right? The cost of insurance for whole life is way too expensive because the average, so you're starting at a 55-year-old, let's just say, versus a 30-year-old. It's way too expensive up front. It's a lot higher as far as cost of insurance versus IULs. And you have so much time in the market. But if you're 50s and 60s, the cost of insurance is it's already high enough that that's when I would do a whole life insurance policy. For estate taxes, 99% of the time, they're doing whole life insurance. Estate planning lawyers love whole life insurance.
Eman asked a good question. You said, what are your thoughts on Dave Ramsey's philosophy of buy term and invest the difference?
It's two things. One, you buy term, no one invests the difference. Most people don't invest the difference, they spend it, right?
Yep.
And two, it's volatile. And three, what happens? So if I have a 20-year term, you're 30 years old. The chances of you dying, 99% of term insurance policies expire.
Yep.
So all these big buildings that say Mass Mutual and New York Life are built on term insurance. It is the most profitable insurance in the history of insurance. So you don't want to have Claudia kill you in year 19 to make sure your family's taken care of, do you?
Ideally not.
So most of my clients would never rent their insurance and have to die in the right year to make sure that their family's taken care of. It's very, very unusual.
Do you do premium financing?
A lot.
Explain how you position that.
So right now it's not the best time because of interest rates.
Yep.
But with high net worth people, they love what? Leverage. They love leverage. when they go and buy these huge buildings, it's leverage. They borrow people's money. It's leverage, right? Now, I had a case. The guy had about $60 million in real estate, no liquidity. He had no cash. We did a $20 million life insurance policy. It was a very expensive policy. He was not going to pay $619,000 in annual premium. If you finance it from the bank and pay interest only, the bank actually lends you the money. They have collateral, which is his real estate, and it's leverage. So a lot of high net worth guys, but there's other things you can do besides premium financing. There's bond funding, there's premium financing. There's a lot of very unique ideas, very unique strategies you can use if it's for a high net worth individual and they love leverage. So as far as leverage, it makes sense. And Jonah, I'm not going to lie to you, that was my largest case ever. It was my easiest case ever because he had a 2% fix. So I mean, he's paying interest only on a $619,000 premium, and he's paying interest only. Not a hard case to sell.
Yeah.
Not a hard case to sell.
What about defined benefit pension plans?
Depends on the client. If they have a huge company or they're younger, it doesn't make a lot of sense because you can't put in that much. It is perfect for a guy, I'll say middle age, a small amount of employees. Maybe 10 employees is great because you have to offer something, I'll say to the employees, but it's a great way to have a qualified life insurance policy
Got it.
as a write-off. But again,
So
premium financing is a great, great, great way to use leverage and sell very large premiums.
yeah. And for those that don't know what premium financing is, what is premium financing in a nutshell?
You're buying a life insurance policy that, again, is out of your estate. A lot of people use it for estate planning. You are essentially you borrowing the money from a bank. If it's, I don't know, Bank of America, Wells Fargo, Paradise Bank, all these different banks, they love life insurance. A part of their portfolio, actually by law, has to be life insurance. It's called BOLI, bank-owned life insurance. So they love life insurance. They're lending you the money. They have collateral, and you are financing the premiums. At the end of the policy, you pay them back with cash value. So on a 10 pay, let's just say, if it's $1 million premium for 10 years, I'm borrowing $10 million for premiums. I have a $30 million life insurance policy. At the end of my 10 years, I take my cash value from it and I pay off the loan. Okay. I have a paid up policy and a huge life insurance policy that's paid up. Or sorry, so I had to pay off the debt and I have a huge life insurance policy.
So, Greg, I want to transition a little bit more practical, where you're sitting down with a high net worth client and just devising different, for lack of better terminology, devising different strategies on how to properly help and serve them. Where I really liked your analogy, and I hope you guys wrote this down, of, hey, we need enough life insurance where your spouse can live off of the interest only and not take out any of the principal. What are other strategies that you're using to help them with insurance when they already have a lot of assets?
If they're business owners, I'm fact finding on their partners. Is there a buy sell agreement? Is there a cross purchase? What do you have? What is it? I have to fact find on every single thing that they have. A lot of business owners who have partners have no buy sell agreement, have no real agreements, have no. On a buy sell agreement, do you know about buy sell agreements?
A little bit.
So on a buy sell agreement, if you and I are partners, right? If I died, God forbid, my wife, who doesn't know anything about insurance, she's a doctor who knows about teeth, is now your partner. You're going to have to give her half the business, no matter what. She can sell that half of the business to somebody else, and now your partner is a stranger who you don't know. It's a life insurance policy to buy out the partners after death.
Is it
So
the same as Key Man then?
no, key man is different. That's for like an employee, right? Where this is partner to partner.
Ah, got it. Okay.
So huge opportunity talking to business owners and their partnership agreements. You can get a lot of business that way, but it's all comes down to the fact finding and asking the questions. And if you don't know the answer, ask another question. Ask another question. Why do you do this? Why do you do that? What keeps you up at night? Every single thing I want to know, they're going to tell you how they want to be sold. Hey, if something were to happen yesterday, what happens? Walk me through what happens. Okay, you have four houses, right? And some cash flow, but is your wife going to manage these things and have to sell? Like, it's crazy. It might make sense to add a life insurance policy, and this is why. It's all in the fact finding. It's all in asking the right questions, and you probe until you know. It's peeling an onion. Ask another question. Why do you have this? I have a 401k. Great. Why? I have life insurance. Amazing. Why do you have the life insurance? It's a 20-year term. Amazing. Why? Well, it was cheaper. Okay. It might make sense at this point if we look at some other strategies that involve life insurance. It might make sense, and this is why. Most of my clients do not want to have to die in their right year. And again, okay, you said $500,000 with no rhyme or reason. Most of my clients want to have a real number that's made for them. And this is why. It's all in the fact finding, though.
I love this because just getting on calls like this, it's humbling for me because it and I hope everybody on this call realizes that that's the beautiful part about insurance is there's levels to the game. And Greg's a level 10 just because he's been doing it for so long.
Okay.
He's 15 years into the game. And so it's we bring I talk to so many different guys in so many of the industries where whether it's pest control, whether it's alarm sales, car sales, whatever, there's only so many pest control contracts you can sell. You're not selling high net worth people like a higher level pest control or a higher level alarm system or a car, like there's only cars are only worth so much. But with insurance, it's you can be doing this and the ceiling is so much higher and so much greater. So calls like this get me fired up. Greg, I want to anything else you want to share about how you position the intent and the why before we move on to the next section?
I think when you educate them properly, they're going to be asking you questions on how to solve a problem. If you can rock the boat, hey, you have this large life insurance policy, you're worth $100 million. Why do you own it outright? I'm not sure why I own it outright. Well, if you own this outright and it's part of your estate, it's taxable. Did you know that? I had no idea. If you can rock the boat and if you can create some kind of fear and curiosity, they want to know more.
Yeah. And we've got 7 minutes left of this call, so I want to be intentional with our time. Two more questions for you. One thing that we do a horrible job at as an agency, partly because we're so blessed, is referrals. So, what is your referral script and your process for after you help a client for getting more lines of business?
So first off, I realized if you don't ask, you don't get, right? But again, when you can really educate and wow your client, the people who are wowed, they talk about you. They want to talk about you, right? So I'm gonna give you two things. One, when you go to your favorite steakhouse and you walk out of that steakhouse, the the GM is not being like, "Oh my God, Joe, to tell your friends and family." You're so impressed that you're going to tell your friends and family. But at the same time, when you ask the right questions in the fact finder, I have a business, amazing. How I have a partner. When you ask the questions, every beneficiary is a referral. Every single beneficiary in mortgage protection is a referral. So, hey, Jonah, I'm so happy just about the mortgage protection we took care of. Hey, if you don't mind, I'm going to reach out to Claudia and explain what we did and why. I want to educate her also on what I do. Every, I mean, listen, my office, it's referrals every single day. All my agents get referrals. You have to ask for referrals. There's a few different ways, there's a few different, but so I'll say, hey, so I get paid in two ways. One by the insurance carrier, and two is by warm introductions to people. that really care about their family, love their family like yourself. You want to boost their ego and say, I would love nothing more than to work for people like, or sorry, than to work with people like you who love and care about their families, who are smart and successful. I mean, who comes to mind? And then what I'll do is I'll copy and paste a text message. I'll share it with you right now. Because if I give you homework, it's never going to happen. So in that meeting, if you could text five of your closest people or ones who just bought a house or had a kid or might need some tax strategy, and I give you my word that if they respond saying no, thank you, I will not reach out because I'm so busy today. I'm not going to reach out for at least a day. But if you could forward this text message, because again, you're not going to narrate and script a text. It's never going to happen. I copy and paste it. All you have to do, Jonah, is copy and paste it.
Beautiful.
But if you don't ask, you don't get. And I feel like in this world with humble people, if you're asking for help, it's hard for people to say no. Like if you came to me and said, "Hey, Greg, I need your help. Listen, I'm really trying to grow my business. I want to help people like yourself. I would love if you can help me." And I think it's a very humbling thing, especially once you just helped me and my family. I'm going to want to give you referrals. If you don't ask, though, you're not getting.
Somebody asked another question where that's phenomenal. And I just dropped that in the chat for you guys. If you guys want to copy and paste and save that, how do you get referrals through your network of real estate agents and financial advisors?
So most of my referrals come from the advisors because I refer them a lot of business. I'm very good at making connections. I'll walk into your office and I would give you two referrals right away. Once I do that and I start making introductions, A, you're going to buy from me. B, you're going to send me introductions back because you want to keep me happy. All my wealth advisors, all my largest cases have come from family offices, from estate planning lawyers, and wealth advisors. They love me because I send them a lot of business, a lot. So everyone I meet, and I'll say, Jonah, hey, you're making a lot of money. You should speak with Jason Brown. He's a stud. He's the best wealth advisor I've ever met. You should really meet him. And Jason wants to keep me happy. He sends me business all the time for very large cases. And guess what? When the referral is coming from their lawyer and their wealth advisor, how easy do you think it is to sell them a policy?
Incredibly.
It's a joke. This is a true story. My largest case was $619,000. I never met him. I never met him. I spoke to him 8 times, never met him. That's very different from our business, right? I've had many six-figure cases. I've never met them. But if Jason Brown and Seth Ellis say, man, I'll tell you, Greg is the best of the best, that's who I'd work with. It's not a sale. It's, hey, this is your problem. This is what I have to do to help you. And that's it. And that's why the retention is there, right? Because I work with a lot of your friends. It's a different conversation. But
Man,
I think referrals is the key to this entire business. I've never bought a lead.
this has been a phenomenal call. Guys, drop an emoji in the chat if you took value from Greg. We're out of time here. I want to end with, I'll let Greg give us his closing thoughts, but before we do that, I want to end with, this is the mindset you guys need to have towards your business, where you're not just an agent. You're not just, a lot of people are just dialing the phones, just, oh, I just want to make a sale. I just want to close this client. You need to have the mindset of, I'm an advisor. And not only I'm an advisor, I'm the best advisor that's been assigned to help these people. And you need to look at each family that you're serving as a long-term relationship. I don't care if you've been doing this for 30 days or if you're brand new or you're doing this a year or 5 years, doesn't matter. That's the mindset you need to have, because the great thing about insurance is, again, other industries, whether it's solar, pest control, alarm sales, car sales, whatever, that's a one and done sale. And you're constantly having to go out there and find new clients and generate new business. The great thing about insurance is, as long as you treat your clients right it's the gift that keeps on giving. So, Greg, last question for you. What advice would you give to the people on this call to have a long-term perspective in this business and more importantly, have success long-term?
And I just want to say one thing after what I think you just said. My average client is buying five to seven times from me, right? Everyone's situation is always changing. I speak to every client twice a year. A, never stop learning. You don't want to be that penguin who every other insurance agent is, where everyone looks alike, acts alike, talks alike. Guys, educate yourselves. You are business owners and you're at the way beginning. There's so much out there to help people. And if you could speak that language, you're going to make so much money. It's insane. We have an opportunity here to change lives, to help as many people as we can. And that's my goal, is to help as many people as I can. In doing so, it pays us very, very, very well. This is the best business in the world. No one can pay me the amount of money that I make by helping these people, solve their problems. And they know they have the problems because I educated them on the problems that they have. So speak with confidence, never stop learning, read. Guys, go on ChatGPT, go online. I'd read about premium financing. I'd read about buy-sell agreements. I'd read about key man insurance. I would read about, hey, what's a qualified dollar versus a non-qualified dollar? That's what I did. I used to call people, I'd call lawyers and say, hey, Jonah, I want to buy you lunch and ask you questions on what really wealthy people do and how you help them. And listen, that's what I used to do.
Lastly, Greg, if for those, because this is one of our biggest weaknesses right now as an agency, transparently, is we stumble over so much money that we could help these clients. So the people on this call, the next time they run into a high net worth client and they want to work with you and they want to learn from you and split you in on the deal, how can they do that? And what specific parameters are you looking for?
Yeah, so minimum net worth would be $1 million. I want them to know this is about insurance or about tax strategies and just a good person. I'm gonna give my cell phone in the chat. And guys, if you have any questions at all, feel free to reach out to me, text me, or call me. I'm happy to help. But a few things. One, you guys have the best mentor in the space. And two, we have the best IMO in the space. I mean, being under Pinnacle with all the things that you guys have, I started with literally 2 products and 2 weeks of training, and that was it. I would love to help you guys any way I can. Never stop learning, read books, go on YouTube, watch videos. You need to educate yourselves because the opportunities are endless and there's so much money in the life insurance space. You guys are in a very small box. Expand your horizons and see what else is out there. It's going to change your life.
Let's go. Greg, we appreciate your time. You're the man. Let's make it a week, guys. I'll see y'all in Chi-Town very soon. God bless.